a currency born to escape governments, now weaponized by them. Bitcoin, once the symbol of decentralization and rebellion, has become a pawn in the greatest geopolitical rivalry of our age, the struggle between the United States and China. What started as a digital experiment in 2009 has transformed into a battlefield of reserves, regulations, and raw power. And when President Donald Trump signed his shock order in March 2025, declaring Bitcoin a strategic national reserve asset, the world's financial chessboard shifted overnight. For decades, the United States has relied on the dollar as the backbone of global trade. The dollar is not just money, it was leverage, a silent weapon that allowed Washington to sanction adversaries, control liquidity, and dictate the terms of globalization. But Trump's executive order marked a radical departure. By creating a strategic Bitcoin reserve funded by seized and forfeited digital assets, America signaled that it was willing to embrace the very technology it once feared. The message was clear. Bitcoin was no longer an outsider. It was now part of the arsenal of statecraft.
China watched carefully. Beijing had long banned domestic Bitcoin trading and mining, citing risks of capital flight and financial instability. Yet beneath the surface, China's relationship with digital assets was far more complex. In 2019, Chinese authorities seized nearly 195,000 Bitcoin from the Plus token Ponzi scheme, a trove worth billions. Officially, the fate of those coins remained uncertain. Unofficially, analysts speculated that Beijing had quietly held them, recognizing their potential as a strategic hedge. Trump's order forced the question into the open. Would China respond with its own Bitcoin reserve? To understand the stakes, we must rewind. In the early 2010s, China was the beating heart of Bitcoin mining. Cheap electricity from Sichuan's hydropower plants and Xinjiang's coal grids fueled a dominance that at one point accounted for more than 70% of global hash rate. Chinese companies like Bitmain became titans, producing the hardware that powered the entire network. Even after Beijing's 2021 crackdown, which drove miners abroad, China's influence lingered through its manufacturing base and shadow operations. Bitcoin was never fully outside China's grasp.
Meanwhile, Beijing pursued its own vision of digital money, the eCNY, a central bank digital currency. Unlike Bitcoin, the eCNY was centralized, programmable, and tightly controlled. It was designed not to liberate but to reinforce state power. Piloted across dozens of cities, it became the largest CBDC experiment in the world. For China, Bitcoin was the wild frontier, but the eCNY was the empire. Yet Trump's move disrupted this balance. By elevating Bitcoin to the level of a reserve asset, Washington challenged Beijing to reconsider whether ignoring Bitcoin was still an option. The shock order reverberated through markets. Traders speculated that if China unleashed its seized Bitcoin, it could rival America's reserve. The symbolism was potent. Two superpowers stockpiling digital gold, each seeking to outmaneuver the other in a new kind of arms race. Unlike nuclear weapons or aircraft carriers, this race was invisible, unfolding in wallets, exchanges, and cold storage vaults. The battleground was not the Pacific Ocean, but the blockchain.
China's dilemma was profound. On one hand, embracing Bitcoin risked undermining its capital controls and the supremacy of the Yuan. On the other, ignoring Bitcoin ceded ground to Washington in a domain that could shape the future of finance. Beijing's strategy became multi-layered. Officially, the mainland maintained its ban, projecting discipline and control. But Hong Kong, under Beijing's influence, opened its doors to regulated crypto trading, positioning itself as a global hub. Simultaneously, China doubled down on mining hardware production, ensuring that even if the coins were abroad, the machines remained Chinese. It was a strategy of indirect dominance. The United States, by contrast, leaned into symbolism. Trump's order was not just about reserves, it was about narrative. America was declaring itself the crypto capital of the world, reclaiming leadership in a sector where innovation had often slipped overseas. By using confiscated Bitcoin, the reserve avoided taxpayer burden, turning crime into capital. It was a clever maneuver, but also a provocation. For China, the message was unmistakable. Bitcoin was now a weapon of statecraft, and America intended to wield it.
The implications stretched far beyond finance. In a world where sanctions had become a primary tool of U.S. foreign policy, Bitcoin offered a parallel system. Nations under pressure from Russia to Iran had already experimented with using crypto to bypass restrictions. If America itself legitimized Bitcoin as a reserve, the credibility of such strategies grew. China, wary of U.S. sanctions, understood this better than anyone. Holding Bitcoin was not just about profit, it was about insurance against the dollar's dominance. Yet the paradox deepened. Bitcoin's ethos was freedom, decentralization, resistance to control. But in the hands of states, it became another instrument of power. The miners who once dreamed of independence now found themselves part of a geopolitical struggle. The coins that once symbolized rebellion were now locked in government vaults. The revolution had been nationalized. As the rivalry unfolded, the human stakes became clear. For ordinary citizens, Bitcoin represented opportunity, a chance to escape inflation, to preserve wealth, to participate in a global network beyond borders. But for governments, it represented leverage. The clash between America and China was not just about reserves, it was about who would define the meaning of Bitcoin itself. Was it a tool of liberation or a weapon of control?
The story of China's Bitcoin strategy after Trump's shock order is still being written. Beijing has not yet revealed its hand. Perhaps it will quietly hold its seized coins, waiting for the right moment. Perhaps it will unleash them, signaling defiance. Or perhaps it will continue to focus on the e-CNY, betting that centralized digital money will ultimately triumph. Whatever path it chooses, the stakes are immense. For in this new era, power is not only measured in tanks or trade surpluses, but in digital reserves invisible to the naked eye. And so the paradox endures. A currency designed to escape governments has become the currency governments cannot escape. The fight between China and the United States is not just about Bitcoin. It is about the future of money, the architecture of power, and the destiny of globalization itself. The blockchain has become the battlefield, and the world is watching.
The silence from Beijing was not indecision. It was calculation. And the weeks after Trump's January 2025 order, China's leadership convened in closed circles, weighing the risks of confrontation against the opportunities of leverage. For a nation that had built its rise on careful timing, the question was not whether Bitcoin mattered, but when it would matter most. China's economic planners understood the paradox at the heart of the moment. The Yuan was tightly managed, the eCNY was expanding, and capital controls remained the backbone of stability. Yet Bitcoin represented a parallel system, one that could not be sanctioned, frozen, or easily controlled. To ignore it entirely was to leave a weapon on the table. To embrace it openly was to risk undermining the very architecture of Chinese finance.
The solution was subtle. Beijing began to treat Bitcoin not as a currency, but as a commodity, a strategic resource akin to rare earth metals. Just as China had stockpiled cobalt and lithium to dominate the future of batteries, it could quietly accumulate Bitcoin to hedge against the dollar. The seized plus token coins became more than evidence of fraud. They became a reserve of last resort, a silent arsenal waiting for deployment. Meanwhile, the eCNY advanced. Pilots expanded across provinces. Cross-border tests began with Hong Kong and Macau, and partnerships with Belt and Road nations hinted at a broader ambition. China's message was clear. The future of money would be programmable, centralized, and Chinese. Yet the shadow of Bitcoin lingered. For every nation wary of U.S. sanctions, Bitcoin offered an alternative. For every citizen skeptical of surveillance, Bitcoin offered escape. Beijing could not erase this reality, only manage it.
The global ripple effects were immediate. Emerging economies, long caught between the dollar and the yuan, began to explore Bitcoin as a third option. In Africa, where Chinese infrastructure projects had reshaped landscapes, local entrepreneurs experimented with Bitcoin payments to bypass currency shortages. In Latin America, where U.S. sanctions had bitten deeply, governments looked to crypto as a lifeline. The rivalry between Washington and Beijing was no longer confined to superpowers. It was shaping choices in the developing world. For the United States, Trump's order was a declaration of intent. By legitimizing Bitcoin as a reserve, Washington sought to reclaim leadership in a sector where innovation had often slipped abroad. But it also created a new vulnerability. If China chose to unleash its reserves, flooding markets with seized coins, it could destabilize prices and challenge America's narrative of control. The battlefield was invisible, but the stakes were tangible.
Inside China, debates intensified. Economists warned that holding Bitcoin could expose the nation to volatility. Strategists countered that volatility was a weapon, one that could be used to disrupt adversaries. Technologists argued that ignoring Bitcoin ceded ground to America's innovation. Politicians insisted that the eCNY must remain the centerpiece. The result was a layered strategy: suppress domestic speculation, expand the eCNY, dominate mining hardware, and quietly hold reserves. The irony was profound. A currency designed to resist governments had become a tool of their rivalry. Bitcoin was no longer the outsider. It was the contested prize. And in this contest, the meaning of Bitcoin itself was shifting. Was it digital gold, a hedge against inflation? Was it a reserve asset, a weapon of statecraft? Or was it still, in some corner of the world, a symbol of freedom?
As the years unfold, the answer may depend less on miners or traders and more on the choices of two capitals, Washington and Beijing. The United States has declared Bitcoin part of its arsenal. China has kept its hand hidden, waiting for the right moment. Between them lies the future of money and perhaps the future of power itself. The paradox remains. A currency born to escape governments has become the currency governments cannot escape. The blockchain is no longer just a ledger. It is a battlefield, and the fight for its meaning is only beginning.
The rivalry between Washington and Beijing did not remain confined to their own borders. Like ripples spreading across a vast ocean, the shock of Trump's Bitcoin order and China's silent counter-strategy began to reshape alliances in the global south. For decades, smaller nations had been forced to choose between two financial empires, the dollar and the yuan. The dollar offered liquidity and access to global markets, but came with the risk of sanctions. The yuan offered infrastructure and investment through the Belt and Road Initiative, but demanded political alignment with Beijing. Now, Bitcoin emerged as a third path, a neutral reserve beyond the reach of either superpower's direct control.
In Africa, where Chinese railways and American aid programs had long competed, local entrepreneurs began experimenting with Bitcoin as a settlement tool. It allowed them to bypass currency shortages and inflation, creating a parallel system of trade. In Nigeria, Kenya, and South Africa, Bitcoin adoption surged not as rebellion, but as necessity. The blockchain became a lifeline where traditional finance had failed. In Latin America, the stakes were even sharper. Countries like Venezuela and Argentina, battered by sanctions and hyperinflation, saw Bitcoin as a survival mechanism. For them, America's embrace of Bitcoin was paradoxical. The same nation that imposed sanctions was now legitimizing the tool used to evade them. China, meanwhile, offered infrastructure and CBDC partnerships, but quietly observed how Bitcoin was becoming a grassroots force. The Middle East added another layer. Nations under U.S. pressure from Iran to Syria had already experimented with crypto to bypass restrictions. Trump's order gave their strategies new credibility. If America itself treated Bitcoin as a reserve, then its legitimacy as a global hedge was undeniable. China, wary of being cornered by sanctions, understood this lesson deeply.
The result was a subtle realignment. Smaller nations began to hedge their bets, holding dollars for stability, Yuan for trade, and Bitcoin for sovereignty. The world was no longer binary, it was triangular. And in this triangle, the balance of power shifted unpredictably. For Washington, this was both victory and risk. America had reclaimed leadership in crypto, but it had also legitimized a tool that weakened its sanctions. For Beijing, the strategy was patience. By expanding the eCNY and quietly holding Bitcoin, China positioned itself to benefit from both systems. The rivalry was no longer about who controlled money, but about who defined its meaning. The human dimension remained central. For citizens in unstable economies, Bitcoin was not geopolitics, it was survival. For governments, it was leverage. The clash between America and China was shaping not only reserves and policies, but the daily lives of millions. As alliances shifted, the paradox deepened. Bitcoin, born as a rebellion against power, had become the currency of power itself. Yet in villages, cities, and digital networks across the global south, it still carried the spark of freedom. The same coin that sat in government vaults also flowed through peer-to-peer settlement apps, connecting people across borders. The fight between China and the United States was no longer just about reserves. It was about the destiny of globalization. Would the future of money be centralized, programmable, and controlled by states? Or would it remain decentralized, volatile, and shaped by citizens? The answer was unfolding not in Washington or Beijing, but in the choices of nations caught between them. And so, the paradox endures. A currency designed to escape governments has become the currency governments cannot escape. The blockchain is no longer just a ledger, it is a battlefield. And the alliances it shapes may define the next era of world power.
By 2026, the rivalry had matured into something larger than reserves. It was no longer just about who held more Bitcoin, but about how Bitcoin reshaped the architecture of sanctions, trade corridors, and globalization itself. For decades, sanctions had been America's most powerful weapon. By controlling the dollar, Washington could freeze assets, block transactions, and isolate adversaries from global markets. But Bitcoin introduced loophole. A decentralized network, immune to borders, offered nations a way to transact outside the dollar system. Trump's order, legitimizing Bitcoin as a reserve, paradoxically strengthened this loophole. If America itself treated Bitcoin as strategic, then its credibility as a parallel system was undeniable.
China understood the implications. The Belt and Road Initiative, its vast network of ports, railways, and digital corridors, had always been about more than infrastructure. It was about building an alternative order. With Bitcoin, China could add another layer, a financial corridor immune to U.S. sanctions. Imagine trade routes where payments flowed not in dollars or yuan, but in Bitcoin, shielded from Washington's reach. For nations weary of American pressure, this was liberation. The architecture of globalization began to shift.
In Southeast Asia, Belt and Road Partners experimented with Bitcoin settlements alongside e-CNY pilots. In Africa, Chinese-backed projects quietly integrated crypto payment rails. In Latin America, governments under sanctions looked to Beijing for guidance on balancing CBDCs with Bitcoin reserves. The blockchain was becoming a hidden artery of trade, connecting nations outside the traditional system. For Washington, this was both opportunity and threat. On one hand, America's embrace of Bitcoin positioned it as a leader in innovation. On the other, it weakened the exclusivity of the dollar. If nations could hold Bitcoin as reserves, they no longer needed to rely solely on U.S. currency. The dollar's dominance, built over decades, faced its first true competitor.
Inside China, the debate sharpened. Some argued that Bitcoin was too volatile to serve as a foundation for trade. Others countered that volatility was a weapon, one that could destabilize adversaries while offering China flexibility. The eCNY remained the centerpiece, but Bitcoin was the shadow reserve, the insurance policy against a dollar-dominated world. The paradox deepened. A currency born to resist governments was now shaping the strategies of governments themselves. The blockchain, once a symbol of rebellion, had become the scaffolding of a new world order. For ordinary people, the effects were subtle but profound. In nations under sanctions, Bitcoin offered survival. In economies plagued by inflation, it offered stability. In regions tied to Belt and Road, it became part of daily trade. The clash between America and China was not abstract. It was lived in markets, wallets, and transactions across the globe.
The future of globalization now hinged on a question. Would Bitcoin remain a neutral hedge, or would it become the backbone of a new financial order? America had declared it strategic. China had kept its hand hidden. Between them, smaller nations were building their own paths, using Bitcoin to carve out sovereignty. And so the paradox endures. A currency designed to escape governments has become the currency governments cannot escape. The blockchain is no longer just a ledger. It is the scaffolding of a new age, and the alliances it shapes may define the next century of power.
By the late 2020s, the rivalry over Bitcoin had begun to collide with another frontier: artificial intelligence, surveillance, and digital sovereignty. What started as a financial contest was now merging with the technologies that defined power in the 21st century. For the United States, Trump's order had transformed Bitcoin into a reserve asset. But the next step was integration. AI-driven analytics began to monitor blockchain flows, mapping networks of illicit finance and geopolitical influence. Washington's intelligence agencies treated the blockchain as a new battlefield, where algorithms could detect patterns invisible to human eyes. Bitcoin was no longer just a reserve, it was data, and data was power. China, meanwhile, fused its Bitcoin strategy with its surveillance state. The eCNY was already programmable, allowing authorities to track and control transactions in real time. But Bitcoin posed a challenge: a decentralized currency outside direct control. Beijing's solution was to harness AI to monitor flows, identify clusters, and predict movements. In doing so, it sought to neutralize Bitcoin's anonymity, turning the rebel currency into another data set within its vast digital empire. The collision of Bitcoin and AI created a new paradox. A currency designed to resist surveillance was now being dissected by algorithms. The blockchain, once a symbol of freedom, became a map of human behavior. For governments, this was leverage.
For citizens, it was exposure.
Digital sovereignty became the new battleground. Nations asked themselves who controls the data, who controls the algorithms, and who controls the reserves. Smaller states, caught between Washington and Beijing, began to see Bitcoin not only as a hedge against sanctions, but as a hedge against surveillance. Holding Bitcoin meant holding sovereignty in a world where data was increasingly weaponized. The implications for globalization were profound. Trade corridors built on Belt and Road infrastructure now carried not only goods, but data. Payments flowed in e-CNY, Bitcoin, and hybrid systems monitored by AI. The architecture of power was no longer physical, it was digital. And in this architecture, Bitcoin was both a tool of resistance and a tool of control. For ordinary people, the stakes were deeply personal. In authoritarian states, Bitcoin offered escape from surveillance, and liberal democracies that offered protection against inflation. Yet everywhere, AI was watching, turning the blockchain into a mirror of society. The dream of anonymity was fading, replaced by the reality of algorithmic oversight. The rivalry between America and China was no longer just about reserves or sanctions. It was about the fusion of money and machines, the integration of blockchain and AI into the fabric of power. The question was no longer whether Bitcoin would survive, but what it would become. Would it remain a neutral hedge, a digital gold, or would it evolve into a weapon of surveillance controlled by algorithms and states? And so the paradox endures. A currency born to escape governments has become the currency governments cannot escape. A network built for freedom is now entangled with surveillance. The blockchain is no longer just a ledger. It is the nervous system of a new world order. And the struggle to define it may decide the future of sovereignty itself.